Of financial statements. In this, 2 points were left out. Point 6, estimates. Estimates are necessary for preparing the financial statements and have a bearing on financial statements. For example, useful life of a fixed asset is estimated to provide depreciation. Estimating expenses to make provision means we are having two kinds of calculations of depreciation. In first, we are having depreciation rate. How much depreciation will be calculated, that rate will be given. Another, that useful life or expected life of that particular asset will be given. So that useful life is a kind of estimation. When we have to estimate that what can be the useful life of a particular fixed asset, and the estimation is also done at the time of making provision. Seventh is source of financial information. Financial estimates are the sources of financial information on the basis of which conclusions are drawn about the profitability and financial position of a company. So these financial statements are a kind of sources of information. Two kinds of information we can gather from this statements. First is profitability and another is the financial position of a company. Now for the today topic, we are having contents of annual report. The annual report of a company as per law should disclose the prescribed information to enable the users to make informed judgment and decision. Means there is a particular information that should be provided through annual report. What is that annual report? Now annual report, when that company requires to hold a meeting of its shareholders every year, that is called annual general meeting, and this is conveyed to adopt, consider and approve the board report, balance sheet, statement of profit and loss and cash flow. So that report will be shown here. Now this there is a set of annual report. First, we are having a report by the board of directors containing report in terms of section 134 of the Companies Act 2013. Directors responsibility statement, report on corporate governance and management discussion and analysis. Second, we are having auditors report to the shareholders. Auditors report to shareholders means an auditor of a company, on the basis of an examination of the book of accounts and information obtained, forms his opinion whether the company has followed the applicable laws and accounting standards, and also whether the financial statements, that is balance sheet, statement of profit and loss and cash flow statement, are true or fair. Means auditor, what is the work of auditor? To audit or to examine the books of accounts, and after examining that books of accounts and the information which is obtained from that books, he is making his opinion regarding whether that particular company that is following all applicable laws or not, whether they are following all accounting standards or not, and that financial statement, that is balance sheet, statement of profit and loss account, are true or not. Third, we are having financial statement. In financial statements, we are having four things. First, balance sheet as the end of the year. Second, statement of profit and loss account for the year ended. Third, notes to accounts. And fourth, cash flow. Here we are having fourth point, that notes to account has a different parts as follows. First, accounting policies followed by the company. Means whichever policies are following by the company, that will be mentioned here in notes to account. Second, details of line items in a balance sheet and statement of profit and loss. When you will see that format of balance sheet, there is timeline. See, this is the format of balance sheet, and as it is written here, shareholders, this shareholders, share application, money pending allotment, non-current liabilities, these are line items in balance sheet. So this details of this line will be mentioned here in notes to accounts. Third, we are having explanatory notes explaining significant transaction and events. If any significant or important transaction are there, its explanation will be given there. Fourth, additional information required to be disclosed. Disclosed means to be mentioned, open, in terms of the part 3rd of Schedule 3rd of the Companies Act 2013. If any kind of that information is there that should be disclosed, that information will be mentioned in notes to account. Now we'll see the financial statement. First of all, we will discuss about balance sheet. Balance sheet is a financial statement that summarizes company's equity, shareholder funds, liabilities and assets at a specific point of time. Now, three things are there in a balance sheet. First is equity, that you can also say shareholder funds. Second, we are having liabilities. Third, assets. And all three things we will summarize at a specific point of time. All three parts of this balance sheet, that is equity, shareholder funds, liabilities and assets, they show what the company owes, that is called liabilities, and what it owns, that is assets. The balance sheet of a company is prepared in the prescribed form, that is part 1 of Schedule 3rd of the Companies Act 2013. Down here we are having format of balance sheet. This is the full format of balance sheet. You can see this it is divided into main two parts. When we see first is equity and liabilities, second part is assets. Now according to that meaning that we have discussed earlier, balance sheet, it is having three parts, three items there, that is liabilities, equity, liability, and the next is asset. Here down. Now see the format of balance sheet. It is having 4 columns. First column is for particulars, second column is for writing note number, means that explanation will be given, that notes we have to prepare notes to account, that number we will write here. Third, figures as at the end of the current reporting period, and fourth, figures as at the end of the previous reporting period. 2 columns will be there for amount. Now see the format in accounting, equity and liabilities. We are having few line items. 4 line items are there. Shareholder funds, it is having 3 items there: share capital, reserve surplus, and money received against share warrants. Second is share application money pending allotment. Third, non-current liabilities, long-term borrowings, deferred tax liabilities, other current liabilities, long-term provision. Fourth, current liabilities. After that we are having the total of equity and liabilities. Down we are having assets, non-current assets, fixed assets, non-current investment, deferred tax assets, long-term loans and advances, other non-current assets. Below that we are having current assets, current investment, inventories, trade receivable, cash and cash equivalents, short-term loan and advances, other current assets. And down we are having total. One thing we have to keep in mind, that the total of equity and liability should match with total of assets, and for the both year. Now we will discuss the heads and contents of the balance sheet. First of all, we are having equities and liabilities. Equity is a liability towards shareholders and is termed as the shareholder funds. It includes share capital, reserves and surplus, and money received against share warrants. The second is liabilities. The term liability means external liability of the company. Means that company is liable to pay to the person who are, or the party who are out of that company. That are called external liabilities. The liabilities toward outsider. It is shown as non-current liabilities and current liabilities. Now, the first item of equity and liabilities is shareholder funds. Shareholder funds includes three items: the share capital, second, reserve and surplus, third, money received against share warrants. First of all, we are going to discuss here share capital. First of all, understand the meaning of share. Share is a document issued by a company which entitles its holder to be one of the owner of the company. Share capital means amount received by the company against shares issued for the subscription, and also shares issued for consideration other than cash. Here that share issued for subscription for cash means in behalf of shares they will get the money. And second term that is used here, consideration other cash, means like if any asset, company have purchased any asset, and in behalf of that asset they are not paying cash, they can issue some shares, that is called consideration other cash. The person to whom shares are allotted, they are known as shareholders. Now this share capital is written like here you can see share capital, it is of three kinds. First, subheads. First we are having authorized capital, second issued capital, third subscribed capital.